Do you remember what you were doing a year ago today? If not, don't worry, as sometimes I can't remember what I was doing 5 minutes ago. But if you are wondering, today is the anniversary of the peak in U.S. equities just before the coronavirus took the markets down. Since then, it's been a bit of a roller coaster ride. And this week, the big headlines were made by the three B's: Bitcoin, bonds, and bullion. Bitcoin exploded to new record highs this week, topping 55,000. And if you're still in, kudos to you. And bonds were battered this week with the long end up steeply. And as I've been saying, few investors are paying attention. And lastly, gold bullion saw its worst week since November. Bullion got clubbed back to an 8-month low with real yields exploding higher. You see, bond yields can batter the market and gold. Now there's two possible pinpricks that might burst this bubble, at least in my opinion. One is inflation and one is bond yields. Now, I can't tell you much about inflation because I don't trust the numbers, but I can talk about bond yields. So let's go there first. Okay, we're taking a look at the 2-year weekly chart on the 10-year U.S. Treasury yield. And again, the symbol, as you can see in the upper left, is $TNX, and I'm using stockcharts.com. And as you can see here, kind of a double bottom perhaps there in early 2020, and here again, say in mid 2020. But since then, it's been a line drive on the way up. We closed out the week at 1.345. That's 1.3%. Even though it says 13.45, I don't know why they can't do the math right. It's 1.345%. Now you go down here to the lower portion of the chart and you can see the MACD, where the fast line moved up and over the slow line here in mid 2020, and then it's just been a line drive all the way up here. I think this is manipulated, and I doubt I'm wrong, but you never know. Moving on up here into the top portion of the chart, you see the RSI. Again, the bottom was here in early 2020, and it's just been a straight line, more or less, on the way up. We're at a 73.53 level, but it can go higher, and so can the yield. Now, we're almost back to where we were about a year ago, and that could be a problem for some of the small businesses. So now let's go take a look at the Russell 2000 because I think that's the weak link in the chain. And so I say small companies can be the weak link in the chain simply because small businesses are much more sensitive to interest rate hikes. Big businesses have cash flows and reserves and they can wait out difficult economic times. But small businesses, it's not that easy. And I know because I've owned some. Now, we're looking here at the iShares 2000 ETF. The symbol is IWM. And this is the best place to take a look at small companies. And you can see from that bottom here, it's been a rocket ride all the way up to here. The current level is 225.19. But what we're looking at is that huge run, parabolic run, all the way up there, more than doubling in about a year. Moving on down here, you're not going to see much in the volume, but you certainly can see by the MAC that that level here was lowest on this chart, and it probably is the lowest going back to 2009. But this peak up here, this exceeds any other level going back as far as these charts go. And that's unprecedented. I think your normal trading, you can see along the line here, is more or less up and down, reverting to that mean zero. We're well above that. And if we revert back to that zero line, it's going to be difficult. Moving on down here, you can see the same thing in the histogram. Looks like we're perhaps rolling over a little bit. Maybe we're going to head down. Don't know for sure yet, but I think we're getting close. Price rate of change, you can see a little bit of sawtoothing at the top there. Same thing here in the relative strength, but this perhaps is a little bit more revealing of a top as long as this continues on down here, which I think it probably will. Moving down here to the stochastics, same thing. And then the Williams, of course, looks like it is also in a topping process. Now, that's not to mean that the market's going to crash, but when you have a market or an indice at such a high level, I don't think it's going to be an easy ride on the way down. So I'm going to be watching the Russell 2000. I'm going to be watching interest rates, and so should you. And for today, that's ChewDog Charts. Thank you.